Are you already like a shadow central bank of Bitcoin?
We are sort of like the central bank of Bitcoin. We created currency that's pegged to the dollar, and then we back that with Bitcoin.
How do you still respond to critics who call this financial engineering?
It is financial engineering. There's nothing to be ashamed of. No one's ever done this.
Hello and welcome everyone to Gatecast, Zero to Take Off. I'm so excited to be your host today. My name is Maria Wobchuk. We're going to board Web3 right now at gate.com, and we have a special guest for you. So please welcome Michael Saylor, Executive Chairman and Founder of Strategy. Michael, welcome to our show. How are you doing today?
Awesome. Thank you for having me.
Thank you for joining. Michael, you are actually a legend, and you're one of the biggest Bitcoin advocates out there. So what was the exact moment that you remember that you thought that you realized that you're all in on Bitcoin and there's no turning back?
During the COVID lockdowns of 2020, we watched Main Street shut down and the world economy came to the physical economy of the world came to a grinding halt, and the financial system was turned upside down and the financial economy exploded. And we had a company at the time and we were struggling to compete. And I realized that we were either going to have a fast death or a slow death, or we were going to have to fight and transform ourselves into something new and digital. And so we discovered Bitcoin during the war on COVID and the war on currency. And Bitcoin was our strategy to escape a pretty miserable existence and turn ourselves into something digital and modern and much better.
So I would say everybody who's watching a MicroStrategy that has become strategy right now, you're buying every dip. So some say that it's visionary, some say it's a reckless leverage. So what do you think those people who say the second thing?
We've raised about $44 billion over the last year and a half.
Yeah.
And most of that is equity. So there isn't really leverage. Equity is capital that you have forever. We're funneling that capital into the crypto economy. We're buying Bitcoin. So to date, we've acquired about $48 billion worth of Bitcoin. We've done it through like 88 different transactions. And we buy the Bitcoin as soon as we raise the capital. And the capital flows to us because people want to buy the credit instruments, or they want to buy the equity, or they believe in Bitcoin.
Talking about buying Bitcoin, if I'm not mistaken, Strategy now holds over 650,000 Bitcoin, which is more than 3% of total supply. So do you still believe that you're a buyer of Bitcoin, or are you already like you can say, shadow central bank of Bitcoin?
Well, our view is that Bitcoin is digital capital. It is the world reserve capital network. It's replaced gold as the global non-sovereign store of value for the human race. And so banks normally buy credit. We actually sell credit. So what we're doing is it's the reverse of commercial banking or retail banking. It is sort of like central banking. We are sort of like the central bank of Bitcoin in the sense that we created a product, STRC. It's a currency that's pegged to the dollar, and then we back that with Bitcoin. And as people buy that currency, STRC, we buy Bitcoin with it, and therefore we're funding the Bitcoin economy by linking it to the traditional finance economy and to the money markets of the world.
Actually, when you said about your raising capital, including preferred perpetuals, to fund buybacks, to be exact. So how do you respond?
To fund Bitcoin buys.
Okay.
Bitcoin buys.
But still,
right?
how do you
We're
respond?
not buying back stock, we're buying Bitcoin. We're actually funding the Bitcoin network.
Okay, so how do you still respond to critics who call this financial engineering?
It is financial engineering. You know, like rocket engineering gave us SpaceX and Starlink, and we've done it through very responsible engineering, and there's nothing to be ashamed of. We're giving the world a better product, and we're doing it through math and engineering and physics.
You actually strengthened Strategy's operating reserves while continuing to acquire Bitcoin. So how do you believe your risk management has evolved?
You know, when we started on this journey, the product was the equity, and we used credit and leverage in order to improve the performance of the equity. So we did a senior note, which was where we pledged Bitcoin collateral. And we realized that was a constraint on our growth. And so we refinanced that, retired it. We retired that, and we pledged never to do that again. Then we moved to non-recourse debt, convertible bonds. So we became the biggest convertible bond issuer in the world. But we realized that it's not possible. Retail investors aren't allowed to buy convertible bonds, and they traded very, very cheap at a big discount to their fair value, and we couldn't deliver them to the world, and that was a constraint. And eventually we outgrew the entire convertible bond market, so we decided we needed to move on. And so the fourth iteration was digital credit. And digital credit isn't a bond at all. Digital credit is an equity, a perpetual preferred equity. And so I would say in the fourth stage, we decided we don't want to have leverage. We want to have amplification via equity. We never want the principal to come due. We'd rather pay a higher dividend forever. I'd rather pay 10% forever than pay 5% for 5 years. We realized the best thing for us was to begin to retire all the debt and then to put in place a cash reserve. We just announced a $1.44 billion cash reserve for the dividends, so that all of the amplification and all of the credit we sell in the future is equity, it's not debt. And the company has the option to not raise any capital in the capital markets for up to 2 years. So we've effectively stripped the credit risk off of the business. And one of the nice, fortunate discoveries when we got into digital credit was we realized that we could take those securities public, like STRC, Stretch, and we could put a shelf registration on them so we can sell them continuously to the market in quantities of 10 million a day, 100 million a day, a billion a day, without a specific offering, and they trade globally on digital rails.
So how's it going with selling those?
We've sold $7 billion, raised $7 billion in the last 9 months. Now it's about an $8 billion outstanding credit industry. So no one's ever done this. Normally a preferred stock would trade over the counter $100,000 a day. A publicly traded preferred stock would trade $1 million a day. Our first digital credit instruments were trading 30 million a day. And then Stretch is trading more than 100 million a day. So it's 100 times more liquid. And Stretch happens to be the biggest IPO of the year, the most successful stock offering of any company in America in the year 2025.
I would like to take a small step back, because when we were talking about MSTR in the past, so some retail holders who bought in the past MSTR when MNAV was about 1.0, and they suffered because it fell below that price. So how do you reassure that every shareholder who is choosing the long-term strategy that they're doing this right?
Okay, well, if you look at the performance of the stock, MSTR versus Bitcoin versus the S&P over the 5-year period since we began this journey, going back to August 10th of 2020 when we announced, Bitcoin's up about 45% a year for that time period, and the volatility is about 45. MSTR is up about 70% a year, and the volatility is about 70.
Oh, even over
the 5 years.
5 years, okay.
The S&P is up about 14%, so 1/3 of Bitcoin over that time period, and the volatility is the VIX about 15. So, and gold, by the way, is up about 14 or 15% a year. And so what you see is that Bitcoin is 3 times the performance and the volatility of the S&P, and our company is about 150% of the performance and the volatility of Bitcoin. And what I'd say to an investor is, if you have a time horizon of more than 4 years, ideally 10 years, and if you want enhanced exposure to digital capital and digital credit, then you would buy MSTR, our stock. If you don't want to trust a counterparty, if you just believe in digital capital, if you believe in the crypto economy, you believe in Bitcoin, and you would just like to keep your money and you have a long time horizon, like 4 years or longer, you should buy Bitcoin. And if you have a shorter time horizon, if you need the money in 12 months, if you don't like volatility, but you still believe in Bitcoin and you believe in digital assets, because the credit instruments were created to give people 2 to 4 times the performance of traditional money markets or traditional credit, because they're powered by digital capital. But they don't have the same volatility as digital capital. And you see that with products like STRC.
So you mentioned once that selling Bitcoin would be the last resort for you right now. So can you describe one scenario when this may happen, and what will be the reason for that?
Well, I'll make one point, by the way. 4 months ago, Bitcoin was at an all-time high of 125,000.
That's true,
So
but that's interesting.
we've only been 12 weeks
Yes.
during this drawdown. And of course, there are already people that, 4 months ago, they thought Bitcoin's gonna go to the moon. And in 12 weeks, they're all very, very pessimistic. That is the marketplace in the crypto economy. The market is very manic, and people go from extreme highs to extreme lows and mood shifts. And so you have to always take a time period of like 4 years to 8 years, because if you focus on 4 months, you're like either going to the moon or you're going to the earth. Our company is constructed to be pretty robust. I mean, it's a fortress balance sheet. So for example, we could go for a year and a half and not access the capital markets, and we could just run off of our US dollar reserves. We've built the business so that we can fund the dividends in 3 different ways. We can either sell equity, which is MSTR, or we can sell Bitcoin, BTC. That's a commodity. Or we can sell a derivative. That would be a call option, a put option, a futures trade on the Bitcoin commodity. As you can imagine, our equity is actually a derivative of Bitcoin. So sometimes our equity is priced at a premium to Bitcoin. When it is, we'll sell the equity. When it's at a discount to Bitcoin, we wouldn't sell the equity. Then we would switch and we would consider, do we sell the commodity or do we sell the volatility? Okay, well, sometimes volatility is priced very cheap. You would want to sell the commodity. Sometimes the volatility is priced very expensively. If the market were to trade our equity at a discount to Bitcoin for 2 years, and if the volatility was cheap, so if the equity is at a discount and the volatility is a discount, we would sell the commodity. And what that means is we might take 25 basis point of our Bitcoin, and then we would sell the most appreciated tranche of that. So Bitcoin that we had purchased, Bitcoin you bought at 200,000 a coin, if Bitcoin's trading at 150,000, you would sell the Bitcoin at 200,000, you would capture the tax credit.
Can you also say to those people who are, in this case, sometimes saying, what if since you're buying Bitcoin, so why should I buy MSTR if I can buy a Bitcoin, which is in this case underlying asset?
Yeah, so
maybe for me it's more valuable.
If you want raw capital, digital capital, you should buy the Bitcoin. And the advantage of that is you don't have to trust, you have no counterparty risk to a currency, to a nation state, to a company, to our company, to a bank, to anybody, to a custodian. That's definitely what you should do. If you're an equity investor, and you're looking for enhanced or amplified Bitcoin exposure, you might buy MSTR. Another way to say it is there are capital investors and credit investors. Let's say you have a 4-year-old child. You could give them $1 million worth of real estate, or you could give them an annuity that pays them 10,000 DRAM a month forever. It's a trust fund, right? It's instant gratification. It's easy. That's a capital investment. It pays you no yield, no dividend. Maybe you'll grow up and you'll want to build a building on it, work very hard and form a company to turn it into income. But there are some people that are capital investors and some people that are credit investors. What I would say is the world is built on capital. The world runs on credit, right? You need both. Bitcoin is digital capital. The world will be built on digital capital, but the world will run on digital credit, and everybody in the world can figure out why they might want to have $10,000 a month for the rest of their life, right, without effort. It's a very simple idea.
You are actually really bullish on MSTR because you truly believe that it's going to last. Let's say you have a new investor, 18 years old, and you're saying they're going to receive dividends every month for the rest of their lives. So are you that bullish on your company?
Okay, that's what digital credit is. So the product we've created is called Stretch. You can buy it on Robinhood. It is like a tokenized money market powered by digital capital. So Stretch currently pays a dividend of 10.75% at par. Par is $100. And so the company pays that monthly, and we adjust the dividend up if Stretch is trading below 100, and then we can adjust it down if there's too much demand. So it is a variable credit instrument, the first in the world. And so how do you fix the credit market or the money markets? The way you fix it is you create a better product powered by digital assets, or in this case, by a digital asset called Bitcoin. Coming back to your first question, why buy strategy stock instead of Bitcoin? Well, Bitcoin is a commodity. It's like 20 acres of land in Manhattan. It's not doing anything.
Virtual one, though.
You're owning part of cyber Manhattan.
Yeah.
Strategy is a company that's in the business of creating credit based on that commodity asset. So if you believe it's a good idea to give 1 billion people a 10% bank account, then you need a company to do it. Our company has got $60 billion of digital capital. We've sold about $8 billion of digital credit this year. We expect to sell and create billions and billions of dollars of digital credit. And the value proposition is, if you don't want to gamble your money in the stock market, and if you don't want to get on the Bitcoin roller coaster of 45 vol, and if you don't want to get paid 0 by your bank or 2% by a money market, you can buy digital credit that pays you 10%.
What was so far the biggest, I would say, the toughest objection inside strategy, and how did you overcome that?
Well, initially, the biggest transformation was to recapitalize the company on Bitcoin instead of short-dated treasuries or money market instruments. And to do that, we had to convince all of the officers of directors and all the officers and all of the directors of the company that was a good idea. That took about 3 months. And then once we all became convinced that was a good idea, it was a 2-step process with our shareholders. We announced that we were going to buy $250 million of Bitcoin, and we were going to buy back $250 million of the stock from any outside shareholder that didn't agree with the strategy. So it was a Dutch tender offer in order to rotate the shareholder base. And following that tender offer, all the shareholders were fully aligned with the vision of the company holding Bitcoin as its primary treasury reserve asset. That all took place between August and September of 2020. That was the hardest, most challenging thing. And then after that, we never looked back. And from that point forward, it was just a series of innovations and enhancements to the business model to get us from there to where we are today.
Actually, you've mastered corporate Bitcoin strategy, I would say, from what you were telling us. What's one mistake you would warn every Fortune 500 CEO about, that if they want to follow your path, what they should, maybe there's something that they should not be doing?
Well, I'm a big advocate to adopt Bitcoin as a treasury reserve asset. Whether or not you put 10% of your treasury or 90% of your treasury into Bitcoin is an elective choice, but I think that it's a mistake to have 0. And I think that the reason why is, if you're capitalized on money market instruments, you're normally generating anywhere from 0 to 3%. And the cost of capital, the S&P index's returns about 14%. So if you're using money market instruments, you underperform the cost of capital, which means that you really have to surrender your capital back to the shareholders, and you end up decapitalizing the company. So the biggest mistake a company can make is to give away all of their money. But by the way, it's like, if you were to say, what's the advice you should give to a family? I would say, don't give away your money.
Okay.
What's the advice you give to an investor? Don't give away all your money, right? I mean, money is economic energy. So if you capitalize on Bitcoin, then instead of having endlessly dividending out your capital or doing share buybacks, you can actually keep the capital and accumulate capital. And most companies that fail, they fail because they have a bad quarter or 2 bad quarters, and they're undercapitalized, and they can't handle the stress, and they go bankrupt. So for the longest time, it was cool to do leverage buyouts or to put debt on a balance sheet. I think that the smart thing to do would be to replace your buybacks with Bitcoin purchases, and to replace dividends with the acquisition of capital, because that way the company is able to weather any storm, and it can invest in anything it needs to invest in should circumstances dictate that.
If Bitcoin thesis still were wrong, what do you think, what will be the first warning sign that you'll be looking for?
If Bitcoin underperforms the S&P for 4 years, that would be a warning sign. If it underperforms for a decade, right, that would be a warning sign. I think Bitcoin will generally always outperform the S&P index over the long term.
But you also mentioned that we already not following, we don't see the 4-year cycle as it used to be. Is that correct? Has that cycle changed? The pattern of each Bitcoin cycle has changed over the years?
I think the 4-year cycles were most pronounced in the first 12 years of the existence of Bitcoin because half of the Bitcoin was mined in the first 4 years. And then 25% of the Bitcoin was mined in the next 4 years.
Yeah.
And then 12.5% of the Bitcoin was mined in the next 4 years. But then we got down to 6.25% of the Bitcoin. And so you can see that the amount of Bitcoin being mined and sold on the market by miners is exponentially falling, and the demand and the liquidity in the market is exponentially increasing. So at this point, the amount of Bitcoin being mined is becoming a second order issue. If you go out another 4 to 8 years, it'll be a third order issue. The primary drivers in the market now are structural support from the ETFs. The ETFs are big buyers. They didn't exist 2 years ago, and now they're massive buyers. Bitcoin treasury companies like ours become massive buyers. As I said, we raised something like 44 to 45 billion in capital in the last 2 years. A third big driver will be banking support. As the banks begin to create credit against Bitcoin, for example, there's only say 16 to 18 billion dollars of Bitcoin that's mined every year for sale. Well, one bank like JP Morgan could create $18 billion worth of Bitcoin-backed credit for their customers in 1 year. So as a big bank comes into the market and they begin to offer loans against Bitcoin or against Bitcoin ETFs, that will be the equivalent of an entire year of Bitcoin mining. And so really the big structural development right now is mega banks in the world beginning to bank Bitcoin and offer credit against it.
Thank you. Now, our show slogan is now boarding Web3, takeoff at Gate.com. You also called Bitcoin perfect money, but Web3 argues that money should be programmable. So is programmable money a breakthrough, or is it still a distraction?
I think that there's an entire explosive dynamic in the crypto economy right now around the industry of digital finance.
Yeah.
So half of the crypto economy is digital capital and digital credit. The other half of the economy is digital finance. And so I think the future of the world is a billion AIs talking to a billion AIs, a billion times a minute. And those digital assets will be tokenized securities, tokenized currencies like the digital dollar, like stablecoins. And also they'll want to settle in digital capital, digital gold, which is what Bitcoin is. So the most promising products are going to be digital capital, digital securities, digital currency, and digital derivative. And the world needs those innovations.
Thank you, Michael. We're going to wrap up with a quick lightning round. So just say the first thing that comes to your mind, okay? Are you ready?
Okay.
Okay, Michael, Bitcoin in 2030, digital gold or global reserve asset?
Digital gold.
One word to describe Bitcoin critics.
Uninformed.
If you could pick up any historic figure to explain Bitcoin to, who would it be?
One historic figure.
Yes, your choice.
I would probably pick Ludwig von Mises.
Oh, interesting. Why?
Because he's the father of the School of Austrian Economics, and Bitcoin represents a digital manifestation of Austrian economics.
Yes. Do you believe that he would imagine that something like this could have happened?
I think he would be
Thrilled.
very, very happy to see the development.
Okay.
Ecstatic, because the Austrian school were the theorists that theorized perfect money and the benefits of free markets and perfect capital markets with integrity. And it wasn't until Satoshi that we had the engineering and we had the technology to realize their vision.
Do you believe that Bitcoin is the only form of sound money?
I think Bitcoin is the first truly sound money in the history of the human race.
True or false? Every Fortune 500 company will hold Bitcoin within the decade.
False.
True or false? Bitcoin will one day be more stable than the US dollar.
False.
True or false? We'll see $1 trillion company built purely on Web3 principles in the next 5 years.
True.
Okay. True or false? Strategy will hold Bitcoin forever, no matter what.
True.
Okay. In 10 years, now fill in the gap. In 10 years, people will say, I can't believe they didn't realize this about Bitcoin in 2025. What would it be?
I think in 10 years, people will say, we didn't realize it was the world's reserve capital network, the foundation of the digital economy.
And one last fun one, Michael. If Bitcoin were an airline and Web3 was a destination, what's the in-flight movie we'll all be watching on the way there?
Atlas shrugged.
Interesting. Thank you so much, Michael.
Thank you.
Today we had a special guest, Michael Saylor, founder and executive chairman of Strategy. And don't forget to like, subscribe, and watch every episode of our new show, Gatecast, Zero to Take Off. We're going to have the top leading voices in Web3 now boarding Web3 takeoff at gate.com together with me, your host, Maria Volchok. I'll see you in the next episode.